Hello, hello, and welcome to March 17th. Alphas have a new leader, IBT at 58%. There we go. IBT at 58%. But we have a new rival, Adobe, and I want to go into Adobe for a number of reasons. One is that we got filled at a real nice spot. We're looking at a nice ATR. The ATR is approximately two ATRs. Now, one point that I want to come to is this. There was a low point, as you can see. There's a low point, as you can see, and then into this area here. This is called accumulation. When the price comes down and hits here, what's happening? Very strong possibility institutions are starting to buy. So institutions are buying here at 420, the low. What would be their out? Well, let's bring up the calculator and work on it. Because remember, the general rule of the portfolio managers is to make 20% profit, give or take 5 to 10%. Depends upon a lot of internal studies and fundamentals of the institution. But that's the going rule of thumb. So we take 420, and we're going to go add 20%, our principal plus 20% gain, and what is the possible exit where institutions might be selling off? And the answer is 504. Look here, 504. Our 3-to-1 ratio is in perfect alignment where institutions might be taking money out of Adobe at 20%. And that is really a nice alignment. That was it. Now, what my numbers over here, this is ATR, which is based over here. The number of ATR. So I'm anticipating that if we wanted to try to get all our money back, 1637 from Adobe, is going to take about 8 days. And the target price is going to be estimated around 561. The slash 4, the 4 is how many days it's going to take us to get to that third ratio. Remember, this is now our stop. We're not moving to stop. This is going to stay here unless we get to that third ratio. So let's review the exit rules. Rule number one. Rule number one of the exit rules. 1 ratio risk for 3 reward. Okay? Rule number 2 of the exit rules. Close is greater than the third ratio. Look for the dipper, low. Higher low, lower low, higher low. That's this. Higher low, lower low, higher low. That's the pattern you're looking for after we close above that third ratio. And then we'll be looking for whatever dipper low occurs, we start there. Rule number 3 of the extra rules are ROI 100 or greater, last bar low. Rule number 4, there is a fourth rule, ROI 150%. Have you seen them? Yes, we have. I have. I even had. We had a 200%. We had a 2% position a couple of weeks ago, and it got out very high. So 150%. Look for exit greater than the high. You can do that, which would probably be hit at market open, or exit is less than the high, and that would be one of your take profits. So those are the exit rules that we are working with here on this channel. Those rules apply to all my trading strategies. There's nothing There's nothing how you say particularly. It's all the rules. Everybody is here. These rules are exit rules to all my trades. And that's why I wanted to start off here with Adobe to explain that we're now going to be looking forward to seeing if we can get to that third ROI, the third ratio, or ROI 100. And we should try, in a perfect trading world, we should get to the third ratio in 4 trading days. I put the arrow here saying this is our entry date. I lined up the 3-to-1 ratio to the low point right here. This is where the sellers stopped. They started selling off and they stopped. They started selling off and they stopped. They came over here, they started selling off, they stopped. They traded, it stopped. So this is a very good support zone, as you can see right here. So now it's a matter of the accumulation occurring and us getting to the third ratio, which is where we're anticipating the institutions will knock the price down. Someone else will come along and say, you know what, the fundamentals in this company are good. I like it. We're going to push it back up, and then we're going to get our lower low, unless, of course, we get to the 100 ROI. That is today's lesson about setting up your exits before you get into the trade. Know what you're going to do. This is the biggest downfall of money traders. Oh, I'm in this great trade and I'm making all this big money. You're not making any money. You're making potential. It's 1,000 birds in the bush. It's not in your hands yet. When you establish your exit rule and the exit rule's triggered, then you made the money. But saying how much you're making means nothing because it's still in the market. It is still at risk until you take it out. All right, let's go to the leader of today. And the leader today was ITB. Where are we? Here we are. So at ITB, we got we're here. Look, this is exactly what we're looking for. A nice steady climb. The third ratio is here at 74. Our stop is down here, and it's just we're just waiting it to happen. And again, reading my notes. Now this one knows $1,913, and at the rate of $2 ATR, it will take 18 days with a target of $96. We're not going that far out. What we're doing for is lesson number 2. The rules of engagement. Protect capital. That's what the first ratio is about. Rule number 2, protect profit. That is what our target gets up here at the third ratio. Start looking for the lower low, the higher low, lower low, higher low. Look, higher, lower low, higher low, lower low, higher low. The dip. This is the dip. This is common in everybody's trading book in the day, especially day traders and swing traders looking for exits when they're in profit zone. And then we'll hang in there until we get ROI 100, or we get stopped out at the dip or low, or we get stopped out to 1 ratio. We take one loss. It happens. Okay, so there's our leader for ITB, and I want to touch upon REI, and that is here is the penny stock. So here at the penny stock, REI. Now, the other day, this did reach 22% right there. And what happened? Look, boom. The market came in and down it went. We got in and we had a 22% profit right in here. We had a 22%. Now, because we're doing what our exit rules that I just put out in the other screen, we're holding to our point. But the point I'm coming to is let's go to this site, which is kind of cool, and say this is the compound calculator. It's really cool. It's here at compounddaily.org/calculator, which is the second tab. And we're going to go ahead. We have put $265 here, which is the trade on REI. We're looking at a 20% gain. And if we do that with 4 trades in a row, which of course, not impossible, but it happens. It can happen. And we stop at 20% profit compound. Excuse me. Reinvest the full money. Our 265 will double in four trading sessions. All right. Well, that is it. We are out of time again today, so I apologize for that. And come back and we'll check out for tomorrow with Losers Become Winners ITB at 58%. Bye-bye.